Hello, my name is Kelly Slomba. Thank you for joining me on this brief webinar. The purpose of our meeting today is to share valuable information regarding mortgage lending as it relates to the real estate broker, realtor, or agent. There are vast differences between the retail and wholesale mortgage channels. I strongly believe that without proficient knowledge of these differences, it is impossible for you to close a home for the highest percentage of clients you meet, which is obviously your goal. I've been in the mortgage industry for over 35 years and have spent countless hours traveling the country educating real estate professionals about the differences between retail and wholesale mortgage lending. I've been on the retail side for over 15 years as a top executive of a major bank, then on the wholesale side as a correspondent lender. Most people who have sat through my presentation have been able to gain the knowledge necessary to increase home sales substantially. Also, my intent is to provide you ways to develop a secondary pipeline that will have your sales increased consistently by always having a reservoir of loyal future clients. As you can see by the graph, over 50% of the U.S. population has a score of 639 or below. Also note that only 10% of the population has a score of 750 and above. These are staggering statistics. And important information about Fannie Mae, Freddie Mac, VA, and FHA is that these government-sponsored enterprises do not set credit score minimums. They set basic lending guidelines. Banks and lenders most often make these guidelines more stringent, setting credit score minimums, tighter income qualification, and make lending guidelines more stringent to fit their own business strategy and profitability expectations. This week's study of 15 local banks or lenders in your area, we found 8 required a score of 640 or higher, 5 required a score of 680 or higher, and 2 required a score of 700 because they do not participate in all lending programs available. As you can see from these statistics, 50% of the American public would not qualify for a mortgage through the retail bank channel. Now let's compare these two methods. Retail lending first, which I did for over 15 years. There are some pros of retail lending. Some banks still do business based on relationships, but much of that has been eliminated and gone by the wayside due to the mortgage crisis in 2008. But there's still some positive factors of visiting your local retail bank. First off, you can apply in person, and you may be able to make your payments locally, and you could have many locations to choose from. Unfortunately, these locations, also known as brick and mortar, cost money to build and maintain, and mortgage rates are affected by overhead, which may make rates higher and fees higher. Another recent study indicates that most retail lenders can charge an application, underwriting, or processing fee, and that application fee may very well be upfront. Because you're dealing with a specific entity, credit score minimums, income requirements, and lending policies may be unknown and very often more stringent. Most retail banks also have off-site underwriting, which can cause communication to be very difficult and cause delays. In these circumstances, the consumer only has one opportunity for approval, and then if something happens, they have to move on the road down to the next bank, a very time-consuming process which in itself can cause credit problems. Now let's discuss wholesale lending. There are some cons of wholesale lending as well. A consumer may not be able to make their payment locally. they're probably not going to have several brick and mortar locations to choose from. But there are many pros as well. The consumer can have hundreds, if not thousands, of lenders at their disposal. Technology is available to ensure the best chance of approval. Technology is available to ensure the lowest rate. Technology is also available to ensure the best product is selected. The wholesale side can be much less bureaucratic, as some have direct links to underwriters. After 35 years of experience in both retail and wholesale lending channels, I have developed a company that, with the use of advanced technology, virtually eliminates any potential buyer from falling through the cracks of the approval process. This technology also ensures the appropriate product is selected for the consumer and most likely will obtain the lowest interest rate available to them on the market. All of this is done with one conversation and no upfront application fee. I will now show you some actual examples of the software and how the appropriate bank or lender is matched for an individual's specific needs. First, what you are viewing is an actual testimonial from a recently closed client that, after 5 unsuccessful attempts through the retail channel, took the advice of his realtor and called cross-state funding. Many more testimonials are available, by the way. Now I am entering the loan scenario. Note, no personal information is needed about the client, just basic loan information. This particular client came to us with a 580 credit score and only 3.5% down. As you can see, several lenders have shown up. The software runs the loan scenario against the underwriting criteria of thousands of banks and lenders, so no lender or bank will appear if the guidelines are not a match. I have designed the format to show the lowest interest rate lender first, and see, I have selected no fee in price, which means only the bank and lenders appear who are not charging additional fees to the client. Cross-state funding is also the best place for the consumer with perfect credit. In this example, I will compute an 800 credit score with 30% down in a super jumbo loan scenario. Note, once again, the lender appearing first would indicate the lowest rate. If the rates are the same, the banks and lenders who appear in ascending order may offer a credit for closing costs to the customer within the rate. No more examples, you get the point. It's a highly proficient program that should be utilized by every consumer during the mortgage shopping process, if only they knew it existed. Now, the program also works for unusual situations like manufactured, modular homes, but is especially beneficial to the professional buyers who don't have the time to make hundreds of phone calls to ask about rates, products, and fees. As demonstrated, technology replaces luck. Good or bad luck has no place in the lending process. Don't get tired of me yet, because as promised in my introduction, together we would develop your secondary, which is your reservoir of upcoming clients who we are working with to secure loan approval in the near future. As I stated earlier, more than 50% of the American public cannot qualify for a loan through the retail mortgage channel. Even though our wholesale software will find eligibility for many of these potential buyers, we will come across some who may not qualify immediately, but with added technology can be qualified in the near future. Allow me to introduce to you Credit Wizard. Using this technology as a licensed lender, I can manipulate items on the actual credit report to improve all 3 scores. This software is specific to an individual's actual report, so I am unable to give you a demonstration. But there's no guessing or advice that I have to give, just pure technology that will increase somebody's score absolutely if they follow the instructions. Here's how it works. Let's say we're 30 FICO points away from a customer qualifying for a conventional loan, and the area happens to be over the FHA lending limit. Using the Credit Wizard, I am able to make the credit report into a working format to find the most inexpensive way the score can be increased to obtain the conventional loan. In the actual example I am referring to, the customer paid down a Kohl's charge by only $150 and a Visa down by $170. The credit score increased 43 points, enough to qualify conventional. Another example of a former closed client, we were able to remove a spouse's charge card from the husband's credit report and wanted to do so as it was reporting as an authorized user and the charge card was currently delinquent, causing our client a really bad score. This change increased the Mr. score by 49 points, which enabled the client to qualify and close. Now, after receiving the documented proof from the client that they've completed all of these actions, in other words, paid off these debt, we need documented proof. We then complete something that's called a rapid rescore. We order the rapid rescore. After the accounts are verified, the score is increased, and the method is much quicker, takes a few days rather than waiting the normal several months it may take all 3 credit repositories to cycle. Wake up, folks, because lastly, we're going to talk about how we get these people into these homes as quickly as humanly possible. In my experience, I found the trickling of required documents coming from a client is a major reason for closing delays. Documents come in one at a time, and the process can take weeks or even months. This is a primary reason for a lot of tension during the process. Well, we solved that problem as well. Our licensed originators meet with the client face-to-face, but in our experience, it tells us to have this meeting at the buyer's current residence, where most, if not all, required documents will be readily available. Our originators are trained to leave with the full mortgage package during the first meeting. This is time-consuming for that evening and costly to my company, but I believe it saves time and money in the long run and most definitely sets us apart from our competition. During the presentation, you saw how a client can be directed to our website to apply. They can complete a request simply asking for more information or complete a full application. The site's very, very simple, informative, and highly secure. Cross-state funding has many more marketing tools available to you, additional technology to discuss, and even lead sharing programs. Therefore, I have asked one of our executives to follow up with you over the next few days to address any questions you may have and talk about how we can grow your business together. If you don't want to wait for them to reach out to you, you can call me directly at 716-864-3137. Once again, my name is Kelly Slomba, President and CEO of Cross State Funding. My direct cell phone is 716-864-3137. Well, that's the end of this. I appreciate you taking the time, investing, and listening to me today. I want you to have a prosperous 2016.